Good morning, ARMR Insiders. This is the ARMR Report morning meeting. Thanks for joining. I'm Brett Rosenthal. We do this every morning for ARMR Insiders. And this is the week we're just sharing with all of you on YouTube just to give you kind of a feel of what we do. So we come in the morning, get ourselves set. I like to write the captain's log, which is basically my thoughts I'm going to share with you today right here in the captain's note. And we go over trading posture and investing posture. So let's just dive right in. Don't forget, I'm sharing with you the ARMR investing way. This is how I run my personal capital. Okay. There's basically 4 portfolios that I manage using algorithms, using the ARMR investing way. We build our whiteboard of fundamental ideas. We use algorithms to tell us when to add capital, when to subtract. We use stop losses to protect. That's the basic process of what we do. And we try to get rid of all the rest of the noise. I don't watch CNBC in the morning. I don't care what they say on Bloomberg. I don't turn on my TV. There's not a monitor in my trading desk. And let me tell you something. When I did that, when I made that change, my trading profits went up dramatically. I kid you not. I used to be like everybody else. I had a big screen in my trading room, my cockpit, as it were, right? And it always had CNBC on. I had to know what they were saying. I didn't need to know a single thing that was said on CNBC. It never makes money. In fact, if you use the opposite of what's being said, it usually makes money. But even then, what they do at CNBC is they always bring on 2 people with 2 opposite views that argue with each other. It doesn't help anybody. And you end up just believing whatever story you believe to begin with. So it's noise, and it gets in the way of proper asset management. All we have to do is our own research, our own due diligence, find companies we want to own, put them on the whiteboard, use algorithms. It's hard for individuals to create algorithms, so I'm going to share with you my algorithms, okay? And they're basically focused on the top 7 indexes that we follow to drive risk decision. The S&P, the Dow, the NASDAQ, the small cap, momentum and value, either sides of that barbell, and the IBD 50 for the innovator stocks. Those 7, when they speak in unison, when we see confluence, what we're doing is uncovering institutional flows of capital, and that's what drives our investing decisions. So our trading posture today, I'm going to launch into it, and let me just say the usual thing. This is what I do personally. Everybody has to have their own path, follow their own way. You got to figure out your risk tolerance, what your goals are, the type of portfolio you're running, and make your own choices. So I'm going to share with you information that I'm developing on my desk. See if it works for you. Okay. So first question is trading posture. How do we want to trade each day? So every day we come in here, and a part of how we run money, we build portfolios of individual stocks. We add to that portfolio swing traded indexing positions. And then we have a piece that we always day trade, primarily the indexes. Okay. So my first thought to you is it's incredibly important every day for a day trader to come in having no memory of yesterday and no opinion of the bigger picture of what the market should do. That will get in the way of making the right decision. That will stop you from hitting the enter button, okay, to buy something, because you have this bigger picture idea of what should happen or shouldn't happen. All we want to do is read and react, trade what we see. I'm building for you, and as you can see, a playbook of trades that we follow. So ARMR Insiders, you click on the insider link. There's just so many ways the market can open each day, okay? And on this page, what I'm doing is breaking down for you the setup and how we trade it in a 1 to 5 step process. Okay, so yesterday's setup, long setup, gap up with a crazy Ivan selling in the first hour, okay? That's what that was yesterday. I'm going to zoom in here and share with you the step-by-step of how to make money on that trade yesterday. All right. So we switch over to here. This is our day trading screen. When the day trade starts, when the morning starts, we add the purple dashed lines, which are the spot gamma locations. All the other lines are automatically drawn using an ARMR day trading algorithm we call the price movement profiler, or the PMP. The primary gist of the PMP is the volume weighted average price, the VWAP. And we're going to look at the S&P as a guide, but this works on all the indexes. You can use it, S&P. We trade the S&P and the NASDAQ. We also trade small caps occasionally. So here's the S&P yesterday. This is the 50-day moving average. I just put that in manually to show you where the 50-day was. These were the gamma locations. All the other lines are based around the VWAP, which is the black dots, standard deviations above and below. Opening range creates the Fibonacci extensions above and below. And the light blue lines are the average true range above and below, all of which are manipulated from the off-the-shelf TradeStation products. We go into there, we write the easy language code to enhance the value of these indicators with volatility components. So the process of this trade yesterday, okay? And I fall victim, and you teach most what you have to learn. So I share with you guys what I'm constantly fighting myself. I come into the day and I look at bigger picture sometimes, and it gets me off my game. So, I have this bigger picture opinion. The market's going lower, but I can tell you with a fair amount of certainty, and I tell myself every day, some of the biggest long trades that I've ever had occur in the midst of a risk monitor red market, because the volatility is greater in a risk monitor red. What happens is the market will plummet lower for a couple of days. The put buyers will get exhausted, having made so much money, and they just decide all of a sudden in unison to dump their puts because of the decay, which creates a ripping Vanna rally that can last all day. Sometimes it lasts into the next day. We'll get to that in a minute. All right. So what you want to do is just trade what you see. Don't overanalyze. Don't overthink. You have a play off the playbook and you trade it. Okay. And so this is clearly the trade yesterday. We have a gap up day with Crazy Ivan selling. What that means to me is the market gaps up and then immediately sells off with a couple of these huge down bars, making you think that the world's coming to an end. Oh my God, the gap up's going to close. Okay. But this is just Crazy Ivan. This is just turning around. This is the Russian sub captain in Hunt for Red October, turning around to see if anybody's behind him. Okay. And when he realizes there's no one behind him, he turns back around and goes in the direction he wants to go. That's what a Crazy Ivan is. Okay. So you get some vicious selling in the first hour that looks like a problem, but doesn't extend anywhere. And so there's two entry points. The first entry point's right here. Now, I have two favorite triggers, and sometimes I fall victim to this. I have two favorite triggers. I like the volume reversal trigger. It's my favorite because the probability of success is so high. The market will sell off in a Crazy Ivan and have a big down bar on volume. These bars are 3-minute bars, by the way. Then it reverses and takes out the high of that big down volume bar within 9 minutes, 12, maybe 12 minutes. But the sweet spots within 9 minutes takes out the high of that volume down bar, that big down bar that made everybody think the market was about to implode. When the high of that bar is taken out, you get long for the rip higher, okay? Because what that big down bar actually was the finishing bar of all the stops that were getting run. So volume pops because the stops just got cleaned out and it reverses and goes back the other way. And that's a lovely trade, okay? So I wait for that. I also like double bottom setups better than, with the exception of the volume reversal. My favorite setup is a double bottom. So what I generally wait for off of this little low here, I don't see any real trigger right there. I'm going to share with you what the trigger was, but I don't really see a trigger I like there. So what I'm waiting for is the rally up to VWAP, a pullback that tests, and then I get long. All right. So that didn't happen yesterday. What we saw right here in this green box is one little hammer bottom. You can see that tail with a close higher at the first standard deviation below the VWAP. That is, in fact, a buy trigger. It's not my favorite. It's not the strongest, but that is the entry point to put capital to work. So you go from the third standard deviation below the VWAP above the first. That's the first part of the buy trigger. You wait for a consolidation. This was only like a 4-bar consolidation, complete with a shakeout right there. and you get long at the end of that little consolidation, which was really right in here. Okay? That's the right entry point. If you missed that entry point, the second entry point's right here. And we shared this on the trading desk yesterday. We went over this as it was happening. Right there was the entry point. You can see the bars turn yellow. It's a very minor pullback to the VWAP, but that's the other setup. It pops above the VWAP, pulls back to the VWAP, and you get those yellow bars telling you that the reversal has occurred at the VWAP. That's the secondary entry point, and you look for a run right up to the ATR high of the day. You can see it went right to it and stopped right here, right? And of course, at the very end, it just pops up a little bit. But that's just the last few minutes of trading. Doesn't mean much. But as you can see, it stops right here at the ATR. All right? So that type of a trade goes into the playbook now. Every time we see that gap up, crazy Ivan, we look for whatever reversal trigger we can find off of the selling, build our position, use our stops, okay? React to what we see, stay nimble. That's the way to make money day trading. Get your head out of it, okay? I think very, very often what can occur in a situation like this is that you look at all of these levels. Well, there's the 50-day moving average. Here's the spot gamma locations. Maybe it'll stop there. Is there enough room for reward? You can't think about those things. You just execute what you see and let the market play out how it wants to play out. Sometimes it'll just stop at a location and reverse. Okay, you book a small profit. Other times it grinds higher all day and you have a huge gain in the portfolio by the end of the day. All right. So, what we're going to be looking for today is another setup like that, or there'll be nothing today. So let's launch into what's our investing posture. So the trading posture is just to trade what we see. We're looking long. We'll put a short out. If we see something that's part of the ARMR playbook, we're going to execute. All right. So then the question is, our investing posture. Does anything change from yesterday's reversal? And I had this debate with ARMR insiders as it was happening in the last hour yesterday. It's possible that the ARMR algos might change to risk monitor green. I'll let you guys know. And it didn't happen. It didn't change. And it really shouldn't change because for a couple of reasons. Number one, in any downtrend, you can get 2 up days. It means nothing. It happens all the time. Just go back and look at downtrends. There'll be 2 up days and then the market plummets again. And then there'll be 2 up days and a plummet. It's just 2 means nothing. 3 tells you there could be a change in trend. So today is day 2. Big reversal yesterday. Big rally yesterday. Today's day 2. See how it trades. But even an up day today wouldn't necessarily change the ARMR algorithms. And a major reason for that is that we're in a holiday shortened week. Markets generally drift higher that week. And there's not an institution worth his salt that's on the desk right now. I'm not even sure why I'm chatting with you guys. Just because I love you guys and it's fun to do this. All right. But at the end of the day, most people with a lot of capital are on the ski slopes or on the beach right now. So volume is falling off of a cliff. So it would be very strange for the risk monitor to go green during a period where volume is contracting, because the entire process of the ARMR algos and the risk monitor is to identify institutional flows of capital. So obviously right now there are no institutional flows of capital. Institutions are basically gone. And so what we're getting is a lot of volatility trading between gamma locations depending on what options traders are doing. And that's not really a direction for the market. That's just a lot of noise within a band, right? So we're all presented with this tug of war type of question after any type of selling in the market. When we get to levels that we think are buyable, and let's be honest, when we're risk monitor red, we're right around the corner from green. So there's at any moment it could go green and we're putting money to work. So there's this question, do you buy as close to the possible stop as you can. And so you start putting money to work immediately because the market had a good day yesterday. And then if it takes out the low of yesterday, you go to cash. You can do that. There's nothing wrong with that. It was a good day yesterday. Put some money to work. Takes out the low of yesterday. You go back to cash because that's not going to work. Okay. Or do you wait for the risk monitor green signal where you have to pay more because the market will be higher, but then you're on the right side of probabilities and you're really trading less, right? Because if you try to preempt the risk monitor, you might have to do that 4 or 5 times before you get it right in some markets. And so you're constantly putting it on, taking it off, putting it on, taking it off. If you wait for risk monitor, you pay a little bit more, but then your probabilities are exponentially increased that the market's going higher from there. I mean, according to the algorithms, that's what they say, right? There's a statistical probability. Once we get that risk monitor green, that, it's a pretty significant probability the market goes higher. So that's why I wait for that. Every now and then you'll see me jump early. I've done that earlier this year. I said to you guys, hey, looks like we're about to go green. Let's put some money to work here. And it ended up being a really nice entry because a week later, the risk monitor was positive and we'd already been making money. That was in an environment where we had everybody at their desk. We could see institutional flows of capital. We could see volume coming in at key levels. We don't see any of that right now. It's a holiday shortened week. Volume's going to be falling off of a cliff. There's no institution putting a lot of money to work right now. So we don't see any of that. And therefore, you won't see me jump early. I won't try to read through the matrix and say, yeah, this is about to go positive, so let's jump. I'm going to be following my day trading strategies, watching the market trade, continuing to do research. We were covering a couple more companies yesterday. Don't forget, guys, and the risk monitor, you can always, in the ARMR report, you can always go to, whenever we're doing research, I've created a fundamental page for you on the website. So you can click on it. I'm listening to the conference calls. I'm talking to management teams. I'm breaking down balance sheets, income statements, what have you. And then, I'm filling out for you the results of what we see. So this is the Micron earnings call. And in this case, there's a couple of certified ARMR analysts, Silver Fox and Ares, that did the work for me and pulled out interesting information off of that conference call. I appreciate it, guys. And there's the credit for the work you did. And then there's some, coverage of Playboy and Sienna and Nokia that I was putting up there for you. So you can see what we're doing over there. So I'll be working on research, day trading, and kind of winding down what I'm doing. And because, tomorrow, no one's going to be here. I'll be here chatting with you if you want to talk, but there won't be a lot of guys trading the desk. But we'll be here because we could get some decent trading opportunities, right? Vanna flows could do all kinds of things for us. So we could get into another market today where it just grinds higher all day. So we're going to get in this morning. Market will open, see what the setup is. If we get a play out of the ARMR playbook, boom, we'll put money to work. Okay. So anyway, those are my thoughts today. I hope they help. Everyone's got to make their own choice of when you decide to jump. And I'll get to your Q&A. What do we got here? Morning. Good morning. Nice to see you, FX. Chris, we'd love to have you as a subscriber. That would be a wonderful thing. Anybody else got a question for us? And I'll tell you what, I'll give you, although you could probably figure this out yourself. But while I'm waiting for you guys to throw in any questions you have, ARMR Insiders, I'll check the Slack room to see. There you go. There's a link if you choose to subscribe, Chris. Otherwise, everybody have a great holiday. If you're leaving the desk early, if not, I'll see you all in the Slack room to start trading. All right, question. What would make you get more into precious metals? All right, that's a good question. Spot physical gold. Start with physical gold, all right? Spot physical gold. It's making higher lows. We put a position on after that reversal bar right here. Okay. That's not what we need. We'll get to this in a minute. So my toe is dipped. Okay. I've got a position on precious metals. I'd love to get larger into the space. I think I'm probably going to focus on doubling my physical positions. That'll be the first thing I do. And I'd like to see the positions close above the 200-day moving average, close above the 50-day moving average. Okay. So we've added a little bit right in here, and I'd like to add more on a move that goes above the 200 and the 50. Truth be told, I really shouldn't have any position on until it closes above the 200, but I stepped a little bit early. The real buy point to me is that bar that takes us above the 200-day moving average, and then the low of that bar would be the stop. Silver is this, the same way. It's even worse because it's farther away from the 50 and the 200. All right, so I really shouldn't even be long here, but we've got a piece on right near the lows, and that first bar that extends higher will be the bar that I finish off my metal positions on, and I'll use the low of that extension bar as my stop. Okay, I'm not putting money into the mining stocks at this time, and I may not. There was a discussion in the Slack room yesterday about how Chile and Peru are leaning towards nationalist governments that are considering nationalizing copper and gold and silver mines and other, commodities. And that is very bullish for the metal itself, but bearish for a number of stocks out there, particularly stocks in the GDX ETF that have properties down in those countries. Now, that's a big picture thought, okay? These stocks can easily have a great swing trade from here. But I'm talking longer term. If countries in South America decide to nationalize commodities, that'll lead to, and that'll be a tailwind for the commodities. So I'd rather own the commodity, because every single time governments nationalize, the production from the mine collapses because governments can't do anything right. Okay, we all know that. So they just ruin the mining capabilities and collapse the national asset, which means less supply, which is bullish for the metal itself, but bearish depending on what company thinks they own mining rights. Okay, so it becomes very muddled, the picture. We have to find companies that have assets in the US and Canada, because those two countries, as far as I know, aren't going to nationalize resources. So I'm not going to buy the ETFs because I don't want the pieces that are in the wrong parts of the world. I would buy specific companies, but not at this stage. I need to see the ability to make money on the underlying metal first. And if I can do that, then I can start maybe branching out into the individual stocks. I don't know. I might just go with the metal this time around and be happy with the money I make there. Nibble on AR yesterday. Okay. I don't really look at natural gas too much. I'm not a big, I haven't even looked at like XLE in a long time, or XOP. Look at XOP, looks great right down there at the 200-day moving average, right? So that's your oil and gas exploration companies. So that looks like the right entry point there. It looks like a perfect 3-bar reversal right there. So you may be right there. My whiteboard. So this doesn't mean it's wrong to go buy commodity stocks. They can make a lot of money. I mean, let's be honest. There's a lot of money to be made in that space when you're right on the underlying commodity. They're great swing trading assets. But I don't like to personally, for the money that I'm willing to invest in my own personal account, when I'm buying individual stocks, I want open-ended growth opportunities that are not cyclical. That's just for me, my money. I'm trying to uncover the next Google, Microsoft, Apple, Amazon, Netflix as they're just getting started and have massive upside potential. That's just what gets me up in the morning. It's just what I enjoy doing. I just like technology. I like biotechnology. I like things that have open-ended capabilities. I don't so much like things that are tied to a commodity that can be manipulated by governments. It just gives me a headache. They're great swing trading vehicles. So you can catch it right and they rip higher. I'm not saying you can't make money there, but if you're just asking me personally, would it go on my whiteboard? I'm just not trading those things. What I do own are the pipelines as I collect dividends. So if I think natural gas is going higher, I think energy prices are going higher, then the natural gas stocks are my favorite place to go and collect the pipelines are my favorite place to go. And I'll collect my dividends on things like, I don't know, One Oak, or Williams. These things all look like XOP, right? They all look like XOP. So I just rather own these. If XOP goes up, these things go up, and I collect a yield of 7%. So I might increase my exposure there. Where's Enbridge? It's one of my favorites. The thing's been destroyed. So it might be time to start adding some more. I have one pipeline in the portfolio right now, and that's Kinder Morgan, which we own. I think we own it right here. And it's gone down since we bought it. So the question is, do I want more? And maybe. It's not an oxymoron. A couple of dividend stocks I own in my portfolio? Here. I haven't sold this since I did that YouTube video back here where I said to you guys, this is the single best way to play cannabis stocks going forward. I literally, there's a YouTube video. You can go find it. I said that this is the number one play to if you want to be a cannabis investor, this is the number one stock to own. And I didn't realize it was going to be that right, because if I did, I'd own it everywhere for everybody. But I own it in my dividend portfolio. I keep collecting my yield, and the stock has gone to the moon. Right? How about AVGO? This is in my portfolio. I own it after the market collapsed. I picked up a 4.4, I think, 4.4% yield down in here on Broadcom, and the stock's gone to the moon. So it's not an oxymoron. And what I like to do is to try to find cash cows in attractive businesses where I feel like the cash cow can easily cover, and I feel like you can look at the cover ratio, they can pay the dividend. And there's some interesting things happening inside the business that could create growth. So more recently, we added shares of AbbVie, right? So what I look for a good company with a good dividend, and the stock gets wrecked like it did right here on a piece of news that does not affect the dividend. In this case, I think it was something wrong with a drug or something that they had, right? Drives it down to the uptrend. You buy it right here when the yield pops because the price goes down, yield goes up. Put the stock in the portfolio, and then you have this move. So what we're buying recently is something like Altria. Okay, we didn't buy Altria here, but Altria sold off, went down to the bottom of that trend. We added it to the ARMR dividend portfolio right in here. It went down a little bit, turned around. Now we're making money on it. So I'm always searching for great dividend payers. If I feel the dividend is safe, I look for a yield between 4 and 8%. Anything more than 8, there's probably something wrong with the dividend. It's going to be cut or something. Anything less than 4, I feel like I can do better. So I'm trying to find a blended rate of around 6. That's the sweet spot for me. And so what I do is I find a company I like, wait for it to get whacked for a short-term reason. When the yield pops, put it in the portfolio. So it can be done. So we build that portfolio. We're working on that. I haven't shared that until recently with ARMR subscribers because dividend investing is totally different for me than the ARMR investing way. I don't sell things out of the dividend portfolio because I'm risk monitor red. I hold those stocks as long as possible and collect my yield. I only reduce or take something out of that portfolio if there's something fundamentally wrong with the company where I think the dividend can't be covered or something like that. I would exit there. But otherwise, I leave them alone and try to hold them as long as I can and keep collecting. All right, any other questions before I go? Because I got to get out of here. Oh, the live trading desk starts any minute now. All right, I got to split. Listen, guys, appreciate your time with me. Hope you have a great trading session. Stay nimble, clear your mind, and just trade what you see. All right. I'll talk to you all tomorrow morning, 8:30. ARMR Insiders, I'll see you on the Slack trading desk right now.